Obviously, the sector's been completely overshadowed by the crisis. You've had mass impact on financial markets. The world has shut down for periods of time and investors have panicked. It was kind of at the start. It's presented major challenges for asset management, but the immediate reaction to the crisis produced varying results for different investment strategies and approaches. So you have passive asset managers that track equity and bond indices. These were exposed to the full extent of market volatility from the beginning of the crisis. They suffered significant losses in value throughout February and March, as well as significant outflows of funds under management. Funds using quantitative methods also struggled. The coronavirus has been seen by some as a black swan event, which has created chaotic data for quantitative programs. So hopefully they're all recovering now. On the other hand, you've got actively managed portfolios that have done really well at the beginning of the crisis, but then started to struggle as time went on. However, despite having valuation volatility and crisis in investor confidence, as the pandemic has progressed, asset management as a whole has proved extremely resilient, which sounds like it's in line with all of the other financial services subsector. And the resilience has been particularly shown in the private equity sector, where there's been a lot of exposure to technology and SaaS investments, and these have fared really, really well, especially in terms of increasing in value, many of them with the shift to online services. And this looks like set to a trend that will continue. So private equity looks good over the long term. Overall, assets under management across all strategies are still predicted to grow and grow significantly. Although with the rising cost of regulation, we're seeing that impact margins. So we expect an overall trend of globalization and consolidation. So we're seeing all of our clients battle challenging conditions, but changes are already starting to take place as asset managers look to the future. Obviously, the crisis has caused a level of disruption, but it's also caused our asset managers to innovate processes and rethink strategies as we all move to a new normal. In general, we expect to see more firms use increased AI-based systems to be able to better detect and handle market disruptions. But as well as dealing with strategic issues and operational resilience issues, including the move to remote working. We've seen COVID bring changes to the investor base that they all need to adapt to. The pandemic has accelerated a number of social trends. ESG has been rising in importance over the past few years, but the pandemic has really caused a lot of people to focus on responsible investing and doing the right thing. Many asset managers have talked about ESG, but the time has really come for them to start to demonstrate their commitment to this in order to attract the investor of the future and maintain assets under management. Other trends that have been accelerated by the pandemic and are really at the forefront of our clients' minds at the moment are the quality of the investor experience and related improvements in technology. There's also a continued focus on cybersecurity as a result of moving to remote working. And other two topics which are right at the forefront of the agenda at the moment continues to be the gender pay gap and diversity and inclusion in asset management.